G'day everyone, welcome back to Pete's Investing. In this strategy edition, we'll be talking about another variation of the commodity channel index. That's the CCI100 crossing over the CCI350 moving average strategy and applying a percentage gain in an average down approach. But first, the legal stuff. We're not offering financial advice, but rather it's an educational series to help you make better trading decisions. Okay, so what I've got here is the price chart of the Commonwealth Bank of Australia. Down here, I've got the indicator that I'm using to trade. So down here, the pink line is the moving average of the CCI100, and the dark blue line is the moving average 100 of the CCI350. So whenever the pink line, the CCI100 moving average, crosses over the blue line, that's where we enter our trade. So you can see there, up here, we've got our little blocks that shows where the trades are entered and where we exit the trade. Enter a trade there and exit a trade there. So whenever the pink line, the moving average 100 of the CCI 100, moves above the moving average 100 of the CCI 350, we buy some shares. And here in this case, I'm buying $2,000 lots of shares for each trade as a minimum. You can buy more, you can buy less, and I've already factored in $8 Aussie for brokerage in each of these trades. So this is a single trade. We enter one lot of $2,000 of shares there. The pink line crosses over the blue line, and we exit when the CCI 100 moving average crosses below the CCI 350 moving average. It shows you a couple of single trades. Over here, we've got the same strategy, except we're averaging down. So in this case, we enter our first lot of shares there. The price goes in our favor. So there, the pink line breaks above the blue line. Pricing goes against us, and we don't enter another trade until we drop by at least 1%, and then the same entry parameters are met where the pink line crosses above the blue line. We enter a second lot of $2,000 of shares, and that's indicated by those steps up there. The price still goes against us, and finally it drops by another 1% from the average price. Now the average price will be somewhere in the middle there, so another decline from the average price. So we want to go further enough down. We don't want to accumulate too many times they're in the same area, so we want to make sure we decline before we average down. So we enter a third lot of shares at this point. Again, when we decline from the average price by about at least 1%, and the pink line, or the CCI 100 moving average, breaks above the CCI 350 moving average. And finally, we exit all trades, all of those three trades we entered, we exit that trade when the average price is gained higher than the close is greater than higher than the average price. And you can see here, this is a profitability chart. So we begin off the profitability of $688, and we close out with $814. So I made about just under $200, or about in that little trade there. One thing to also highlight, I've backtested these on a 4-hourly charts. So this is 4 hourly, although you can apply it to a daily chart or most time periods. But again, the pink line, the CCI 350, sort of simulates, if you like, a weekly time frame. Sorry, the pink line is the 4-hourly time frame, whereas the blue line is more so a daily, closer to a weekly time frame. So in other words, the CCI 100 moving average is a lot quicker action than the CCI 350 moving average, which simulates a weekly time frame. Here are the trading rules for the Commodity Channel Index 100, crossing over the CCI 350. I've applied this strategy to a 4-hour chart, and we enter the initial trade when the moving average 100 of the Commodity Channel Index 100 period crosses over the moving average 100 of the Commodity Channel Index 350 period. We exit the trade when the close is greater than the average prices, and the moving average 100 of the Commodity Channel Index 100 period crosses under the moving average 100 of the Commodity Channel Index 350. We average down when the share prices decline by at least 1%, and the same entry parameters as our initial entry has been reached. Also, when we average down, we buy 2 times the previous number of shares we bought. Lastly, what I'll show here is this is a table I'm using to capture all the strategies I've tested, and this just shows the parcel of shares I've backtested on. So you've got to be mindful of all the backtesting that you can do. I've tried to select a parcel of shares which are going in various directions. In other words, some of these are going in a positive directions, others are going sideways, and others are going a more sort of downward direction. So these are a fairly good balance of most chart movements. Also, a lot of all these are blue chip shares. We want to trade blue chip shares that pay dividends. And I'm not suggesting you buy any of these. I'm just using these as backtesting to demonstrate the effectiveness of these programs. These are all the programs I've backtested over the periods. I've done quite a few. And today we've demonstrated the 4-hourly chart for a CCI100 crossing over the CCI350 strategy. This first table shows the profitability for each of these over the period tested. So it demonstrates that it's gained $14,204 in backtesting in terms of revenue. The second table shows a drawdown requirement. And a drawdown is basically the highest point of profitability to the lowest point in any one part of the chart. So in this case, the total drawdown would have been 6,400 for that parcel of shares. And lastly, the profit over drawdown percentage is simply the profit divided by the drawdown amount, and that gives you a respective for each chart, but also a total average overall. What I've done then is I've ranked these to show that so the higher the percentage, the better. So I've ranked these to show which of these strategies is performing most effectively. So the latest one we've tested today comes up at third in our ranking. So again, one other thing I want to mention as well is just be mindful. Notice here, for example, today's test showed $14,000 or just a bit above in terms of revenue with a relatively low drawdown of 6,400. Whereas the number one strategy showed $80,000 revenue versus $60,000 drawdown. But you notice some over here, for example, this one, it's a smooth Akinashi, that showed a return of 199,000, or just short of 200,000. But you'll notice there it's a much larger drawdown. So just be mindful, that still showed a percentage of 175. So just be mindful of sometimes they might be very relatively low revenues and relatively low drawdowns with a relatively high percentage result. But anyway, I'm just using the percentage result as a marker, as a KPI, to show the effectiveness of these programs, and I'll keep this updated as we move forward with other strategies. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. This ensures the probability of the shares of the company you're buying has had a good track record and more likely potential of future growth. Buy stocks which pay dividends. Do a quick search of the stock before buying to ensure it recently paid a dividend or is about to. This is a good indicator that the company has future potential of growth. If the company recently stopped paying dividends, it may be a sign that their growth potential may be challenged. Don't short positions, go long only. If you short up instrument which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. Do not trade on news. Price is already factored in the share price. If you read an article in the finance pages which talks about an event on the stock you're considering, the chances are it has already been factored in the share price. So you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't and the share price action. Suggest you watch that video to get a better understanding. To be able to ask specific questions, feel free to log on and sign up to the Pete's Investing Patreon page. That's where I get more specific questions answered and help support the channel. Thank you.